when you're watching late night TV, or whenever you're listening to the radio, and a lot of times late at night too, you'll hear these ads. You need to incorporate now to protect yourself. You need the LLC to protect yourself. You could lose everything. Well, those questions are legal questions, and we don't answer that. That's why you go to the attorney for those questions. But what happens is that in today's world, the legal entity, when you make, I incorporate as a corporation, or I become an LLC, at that moment, you now have restrictions. So if you've incorporated, you don't have the flexibility that you would if you set up an LLC. Now, the difference in liability protection between the two, again, you need to talk to an attorney in the state that you're operating. But for us, what it does, once you're incorporated, you've restricted your decisions to either be a regular corporation paying double tax. The corporate pays a tax. When the money is distributed to the individual, they pay a tax again. Again, 99% of the clients that we would do business with are in the S Corp area. The other thing, if you say, well, I've set myself up as an LLC, and I get clients walking in the door, they've already got the corporation set up, or they've already got the LLC set up. In that LLC, I ask for their operating agreement. See, it's not just legally setting it up in a state or in different states, but it's actually that operating agreement, because we have to look to see, have you elected to treat it as a sole proprietor, a partnership, an S Corp, or a C Corp. And that's where we help. Because the other thing, realize that there's also the problem, if you're incorporated and you put the assets into the corporation, to take those assets out of the corporation, it triggers a gain. But if I put an asset in a partnership, or it's in a sole proprietorship, the general rule, if I take it back out, there is not a gain. There is a taxable event. Also, whether you incorporate or have an LLC, when you put assets into those entities, it can create a taxable event. So the easy part is to file to be a corporation or file to be an LLC. The tough part is what we call transferring or funding those entities, and we have to watch, because there are taxable events that can be triggered by putting assets into either one of them. There can be taxable events on distributions, and there can be taxable events on any kind of liquidation. So before you make the decision, should I be on that late night talk show, should I be a corporation or should I be an LLC? You come to us for the tax advice. You go to the attorney for the legal advice.